Hello, I'm Jihadi Scotty, fighting the war against corrupt banking systems and government employees. Anyways, check this out. If you're thinking about refinancing, let's see. I had an investment property. It was about $100,000. I had it out 30 years, and it was 9%. As you can see right here. I'm going to hit calculate, and I'm at calculator.net, amortization calculator. And so I had it 15 years. I was thinking of financing. I did refinance to 7%, but that was a big mistake. My whole goal was to pay off the damn thing, right? If your goal is to go 5 years and refinance your house every 5 years or whatever when the interest rates go down, or whatever you're doing with that, you're probably better off renting, especially in a time of deflation. So anyways, you can see if you go 15 years, and then after 15 years you want to add all this interest right here all the way down to 30 years. Okay, and you will get interest paid from 15 years. You will get $65,000. Okay, so that's what I would have paid if I would have just stayed the course. Okay, I was at 15 years into the loan. If I would have just stayed the course, I would have paid all this interest from 16 years on down, right? Which is $65,000. Now, if I refinance at 9%, starting all over, refinance at 7%, sorry, starting all over at the same 30 years, and then go add all this interest up. They tell you what the total interest here is. There's your 139,000. So you take 139,000 minus 65,000, and you get $74,000. So 74,000 if I would have refinanced, would I pay in interest, or if I just stay the course at 65,000, so I could have saved myself about $9,000, whatever. 74 minus 65, whatever that is. Okay, so I lost about $9,000 or whatever by making that bad decision, thinking that 9% was bad, which it wasn't, because my goal was to pay off the property. That's all I wanted to say. I wanted to record that for my sake and for everyone else's who's thinking maybe you can think for yourself once in a while, and not someone's got a conflict of interest. Maybe he wants the commission. I'm refinancing. It's a refinance scam. Like it seems to be going on every 5 to 7 years. But don't worry, right? All your interest can be written off. Uncle Sam will help. When you file your taxes like a public office, as a trader business. Anyways, public official, government employee, way of filing taxes. There's several ways of filing your taxes. Anyways, the only way they'll really accept is as a government employee. Of course, it's all government forms. It's government law written by government employees. So that makes sense, and it's perfectly legal. Not perfect, but for government employees taking the benefits of the franchise. And this is benefits when you write off all that interest. I just wanted to get into that. Don't get me into that. But I just wanted to focus on this amortization calculator for now, and then you can think for yourself, okay? Because it changes. As you're just going 2% between 7 and 9% like I did. Your situation might be different, so add up all the interest. So like, let's say you have a house at 5%. There, I calculate for 5%. go down here to the calculator. Usually it takes about 15 years to break even. Like here it's about 16 years. So it's 15 to 17 years to break even. But, you know, so you've owned the house for 10 years, right? That's typical. 5% was a while back, about 10 years ago. Maybe 15 years ago was 5% interest rates. Go up and down. I've got a 5% one that I got in 2000. But I'm not going to refinance because I'm like, you know, going on, you know, 15 years on that. I'm not refinancing. Fuck you. Fuck you. You know, I'm going to do my own thinking for me. Thank you very much. And go ahead and comment if you have any comments on this. And, you know, like maybe I'm thinking stupid or something. I'm just adding the interest. So you got a 5% loan. And then I already did the math. Let's see. A 5% loan, we already know how much interest we're going to pay, $93,000 over the period of the loan. And then if you're thinking about going down to, but you own it for 10 years. So you have to go 11 years. You have to add up the interest from 11 every year, the total interest of every year from year 11 to year 30. Notice how your last year, see, the interest goes down, see? It's an amortization thing, okay? It's tricky fucking magic. But anyways, so you're gonna add all that up and you could come like at 15 years. Look, 15 years in, you will pay $32,000 interest on a 5%. How did I get 32,000? Well, I went down to 15, added up all this interest right here, this interest right here, and then so you want to go. Let's say you want to go 30. You want to go. So that's $32,000 you're going to pay in interest at 15 years. Okay, at 10 years, at 5%, at 30 years. Alone, your interest total is going to be $51,000. So let's say the average, okay, 10 years, that's good, right? No one has a loan for 15 years, very rare. If you're coming into this video, you're thinking of refinancing already, you probably haven't gone even, you know, everyone goes like 7 years and refinances. So you want to refinance for 3%, and then, so what's your new interest? Your total interest is $51,000. So you're at 5% at 10 years in, you will pay $51,613. At 3%, 30 years in, you're going to start over. You're paying $51,727. The only thing is your monthly payment will be different. But do you want to not pay your house off ever, or just have a little higher monthly payment? You know, whatever. It's your decision. But there's the place to go. It's a pretty neat. You got this graph. It's really not that accurate though, with the principal and interest being, because we figured out that it's about 15 years in. Yeah, that's about right. Sometimes it's wrong. When the principal and interest are equal. But anyways, just check it out. And I like that new payment, $421 versus 5%, which is $536. It's about $110 a month savings. But you're going to pay a bunch of fees. If you're in it at 10 years, stay the course. You're doing fine. 5% versus 3. Or, you know, 7% versus 9%. If you're at 15 years, stay the course. 7 versus 9, you'll actually save about $9,000. 5% versus 3. If you're at 15 years into the 30-year loan at 5%, you're better off staying the course and not refinancing to 3%. Got it? I believe. Comment or whatever if you think I'm wrong. I'm just going by what the calculator says. All right, it's an amortization calculator, tricky freaking money changing magic from the money changers musicians, right? All right, take care. Hope this helps. Bye.